Hello and welcome back to Explain the Charts. Today, September 9th, 2025, we're dissecting the S&P 500, ticker SPY, which is currently making headlines by scoring fresh record highs. The market is buzzing with optimism, driven largely by the belief that recent economic data could pave the way for Federal Reserve interest rate cuts. Specifically, the U.S. economy reportedly created 911,000 fewer jobs in 2024 to 2025 than originally reported, a significant downward revision that many analysts see as more ammo for Fed rate cut. This dovish interpretation is fueling a rally, with the S&P 500 settling above the 6,500 level, an all-time record, as reported just minutes ago. While this sounds unequivocally bullish, we must note some underlying currents. Market breadth has been unfavorable, with falling stocks outnumbering rising issues despite the index gains, suggesting concentrated strength. Geopolitical events, such as an Israel attack on Hamas in Doha, have seen a muted reaction in oil prices, indicating that other macro factors like Fed policy expectations are currently dominating market sentiment. Now, let's dive into the daily chart for SPY to understand the long-term trends and key levels at play. Over the past year and a half, SPY has shown a remarkably strong uptrend, with consistent higher highs and higher lows. However, this ascent hasn't been without significant pullbacks. If we focus on the period around April to mid-May 2025, we can observe a sharp, almost capitulation-like dip. Notice the dramatic drop from the 560s down to approximately $481, marking a critical support level around April 7th. This V-shaped recovery from the $480 low was swift and robust, demonstrating strong buying interest at that major support zone. This reversal was a classic example of buyers stepping in aggressively after a significant correction, pushing the price back up with considerable momentum. Moving to more recent action on the daily chart, from early July 2025 onwards, SPY has been on a clear upward trajectory, forming a series of higher lows and progressively testing new highs. The daily candles mostly exhibit bullish characteristics, often closing near their highs, which signifies sustained buying pressure. Volume during this recent rally has been respectable, supporting the price appreciation. We can identify minor pullbacks around the $620 to $630 range as interim support levels that held firm, confirming the bullish bias. The market's resilience in the face of minor corrections indicates underlying strength, which is consistent with the current narrative of record highs. Yesterday, September 8th, SPY closed at 648.83, setting the stage for today's reported jump above 6,500. A level that technically represents a new, untested resistance turn support. Shifting our attention to the 1-hour chart, covering the latter half of August 2025, we can observe the shorter-term dynamics preceding these record-breaking days. Notice the consolidation between $635 and $638 from August 20th to 22nd, followed by a significant bullish breakout around August 22nd. This sharp move from the upper 630s to the mid-640s occurred on increased volume, signaling strong institutional buying or a reaction to positive news in that period. Following this breakout, SPY found new support around the $645 mark, consolidating there for several days. The overall structure here reinforces the prevailing bullish sentiment, showing that buying momentum was building even before the latest record-setting spree. Now, let's zoom into the most recent action on the 15-minute chart, covering September 4th to September 8th, 2025, to pinpoint intraday trends. On September 4th, we see a steady climb, with SPY moving from the 646 range to near 649, maintaining a tight channel. However, September 5th introduced some volatility, opening around 650, but experiencing a notable pullback throughout the day, closing around 645.96. This short-term reversal, albeit minor in the grand scheme, highlights the sensitivity to profit-taking or short-term bearish pressures. Yesterday, September 8th, SPY opened at 648.62 and saw fluctuations, but managed to hold its ground, closing slightly higher, just under the 649 mark, setting up the context for today's record run. The high transaction counts during these periods suggest active trading and significant market interest, even in these shorter time frames. Considering both the news and the charts, the short-term outlook for SPY appears cautiously bullish. The revised jobs data is being interpreted as a catalyst for potential Fed rate cuts, which traditionally boosts equity markets, especially growth stocks that lead the S&P 500. For a short-term bullish continuation, we'd want to see SPY hold above the newly established 6,500 psychological level. Any dip towards the 648 to 649 range could be seen as a buying opportunity, assuming the positive news flow persists. A short-term bearish reversal might occur if upcoming inflation data disappoints, signaling that the Fed might not be as dovish as currently priced in. In such a scenario, the market could retest the 640 to 642 support levels, where previous consolidations occurred. In the long term, the overall trend on the daily chart remains strongly bullish, indicating that sustained buying interest is likely to continue driving SPY higher. The primary reason for a long-term bullish outlook is the continued expectation of a dovish Fed, coupled with strong earnings from key S&P 500 constituents like the AI sector, as highlighted by Nebius Group's deal with Microsoft. Should this fundamental backdrop hold, SPY could aim for higher targets, possibly in the 660 to 670 range, making any significant pullbacks potential long-term accumulation zones. Conversely, a long-term bearish scenario would likely require a major shift in monetary policy, perhaps an unexpected hawkish turn by the Fed, or a significant deterioration in corporate earnings. The 10-year Treasury yield, currently at 4.08%, will be a critical indicator. A rapid rise could put pressure on equities. If SPY were to break below the significant support around 630 on the daily chart, it could signal a more profound reversal. Another long-term risk would be adverse Supreme Court rulings on tariffs, which Wall Street analysts believe could negatively impact stocks. Pay close attention to upcoming inflation reports later this week, as these will heavily influence Fed expectations and, consequently, market direction. To recap the important price levels, on the bullish side, holding above 6,500 is crucial for continued momentum. The next significant resistance levels are purely speculative new highs, perhaps aiming for 6,550 to 6,600 in the very short term. On the bearish side, initial support can be found around 648 to 649, a previous high that should now act as a floor. A more substantial support lies around 640 to 642 from the recent hourly consolidation, and the critical daily support around 630. The likelihood of continued upward movement is high, probably around 70%, reinforced by the dovish Fed narrative and strong tech performance. This likelihood would diminish if inflation data exceeds expectations or if geopolitical tensions escalate unexpectedly. In contrast, a significant short-term correction, say below 630, has about a 30% chance, mainly if investor sentiment shifts quickly due to adverse economic data. Traders should look for confirmation of bullish or bearish momentum on intraday charts with corresponding volume, using moving averages and other indicators for entry and exit points. Monitoring the 10-year Treasury yield and the dollar index will also be key, as these often move inversely to equities. That's all for today's in-depth analysis on SPY. Make sure to hit the like button and subscribe for more insights from Explain the Charts.